Hi friends, welcome back to FinveStock. Mainly before buying a stock or selling a stock, we will search for stop loss as well as target. The main criteria for selecting target stop loss is through support and resistance line. In this video, we will see how to identify support and resistance zone. Are they different? How one termed as support and how one particular zone is defined as resistance. And how to plot the support and resistance line, that also we will see in the same video. Let's begin. So the resistance and support level is decided by the concentration of demand as well as supply. The support zone is represented by concentration of demand, whereas resistance zone is represented by concentration of supply. So resistance is a zone where when the price is going in an uptrend, where in between they will take a pause. So that stickiness of the price range is called the zone of resistance. Whereas when the stock is going down, forming a sticky patch in between on price action is called the support zone. So support and resistance are not the different. Both are the same line. One can consider this line as support as well as resistance. The term support and resistance is coming based on where the price action is happening. Assume if the price is happening at bottom of the line, it is called resistance. Whereas if the price action is happening on the top of the line, then the line is termed as support. That is the only difference. So the resistance and support line is based on where the price action is happening or where the current price is in comparison to the line where we are specifying support or resistance. Let's see a small example. Assume the support or the resistance line is at say 100 rupees. Assume the stock's current price is at 95. Then this line will act as a resistance because the price range from 95, it will go up and it will face a resistance while crossing the 100. Assume the price of the stock is currently at 105. In that case, this line will act as a support because once the price comes down, it will come to this support line. It can reverse from there. So in the upcoming slides, we will see how to plot support or resistance line. So always support is termed as more buyers than sellers. So support price is a price at which one can expect more buyers than sellers. So this is a typical example wherein the stock touched to a particular zone. From there it got reversed because of lot of buyers in demand. Again it will come back to the same line. Because of buyers action, it will push back. Similarly, if 3 points, 3 times the price action is happening at the same zone, this zone we can term as support zone. Similarly, resistance zone is a zone where sellers are more than buyers. Resistance price is a price at which one can expect more sellers than buyers. If you take the example, consider a stock where the price is going up towards uptrend and it forms a stickiness. From there it is reversing. Similarly, the same thing is repeating at a particular interval. Then we can call this as a resistance zone. In resistance zone, sellers are more compared to buyers. That is the reason why the stock pricing is reversing. So as explained, the support and the resistance both are of same line. We will call a support or resistance based on the price action at which the price is currently happening. Suppose if the price is on the bottom of the line, this is termed as resistance, and assume if the price is on the top of the line, it will term as support. As we explained earlier, consider this is a 100 rupees price range where we identify as a support or resistance line. So currently if the price of the stock is around 95, then this will term as resistance. And once it crosses the resistance and it is on the top of that line, say 105 rupees, this line will term as support line. So the next question is why support and resistance zones are required. It is for identifying target or stop loss. The best way to identify the target price is to identify the support or resistance zone. The support and resistance are specific price point on the chart expected to attract maximum amount of either buyers or sellers. So now let's see support and resistance zone in detail. First we will see the support zone. As the name suggests, support is something that prevents the price from falling further. The support level is a price point on the chart where the traders expect maximum buying coming into the stock. Whenever the price falls to the support line, it is likely to bounce back. The support level is always below the current market price. There is a maximum likelihood that the price could fall until the support consolidate, absorb all the demand and then start moving upwards. The support is one of the critical technical level market participants look for in a falling market. The support often acts as a trigger to buy. Similarly, for resistance, as the name suggests, resistance is something which stops the price from rising further. The resistance level is a price point on the chart where traders expect maximum selling for the stock. The resistance level is always above the current market price as explained earlier. The likelihood of the price rising to resistance level, consolidating, absorbing all the supply and declining is very high. The resistance is one of the critical technical analysis tool which market participants looking at a rising market. The resistance often act as a trigger to sell. Now let's see how to identify and draw the support and resistance line. There are four major key points to identify the support and resistance zone. First one is the data point. So for identifying support and resistance zone, more data points are required. So if you want to try to identify some support zone and resistance zone for intraday activities, the minimum data points required is approximately 6 months. If you are looking for swing, then we should go for long-term support and resistance zone. So the minimum time period required is more than 12 months. So once the data points are available, the second point need to identify is to identify three price action zone. Price action zone is nothing but the sticky points. When the stock starts moving, at a particular point, it will start consolidating. So this zone is called the sticky zone. So how to identify the price action zone? Either the stock, while moving upward, should hesitate to move further upward. That is one point. The second one is hesitate to move down further after a brief down move. Or a sharp reversal. It can be up to down or from down to up. So in these three cases, we can call this as a price action. So the third point is to align the price action zone. So we need to identify this price action at least 3 points. So one thing we need to remember is it should be approximately equally spaced, and the other one is it should have the same price zone. If these two conditions satisfied, it is a perfect mix for identifying the zone. And the final one is to fit a horizontal line. So we will take an example wherein assume this is a price chart wherein we took it for last say 12 months. Assume the price is moving something like this. So in this case, we will identify this as one price zone, second price action zone, third price action zone. So based on this, we can say this is the zone of resistance. Similarly, suppose there is a downtrend wherein the price action moves like this, then we can identify these points as price action area. And here we can mark a zone. This will act as a support. Assuming the current price of the stock is somewhere here. So for more clarity, we will see some examples on live chart. So how we can trust on this support and resistance line. So support and resistance line are repeated several times. That's why the zone has been identified. The identification of support and resistance zone is based on repeated time-tested price action zone. So therefore, keeping the very first rule of technical analysis, that is, history tends to repeat itself, we will go with the belief that the support and resistance level will be reasonably honored. Purely from my experience point of view, this well-defined support and resistance points are usually well respected. So all this comes from experience. So once you are well versed to identify the support and resistance zone, it is easy to identify some good trades. So before taking a trade with support and resistance, we should have a checklist. So the first two critical factors for this checklist are, one is the stock should form a recognizable candlestick pattern, that is the price action. So in our previous video, we saw various price actions using single candlestick, multiple candlestick patterns and all. You can find these videos in the I button above. So if you didn't watch that video, please watch the price action, because for finding out support and resistance, price action is critical. So once you find a particular price action, then you should look for support and resistance. So support and resistance should confirm the trade. For a long trade, the low of the pattern should be around the support. Similarly, for a short trade, the high of the pattern should be around the resistance. So as a summary, the key points from these videos are: support and resistance are price points on the chart. Support is a price below the current market price, that indicating buying interest, whereas resistance is a price point above the current market price that indicate selling interest. For identifying support and resistance, place a horizontal line in such a way that it should connect at least 3 price action zones. Support and resistance can be identified using targets for the trades. The identified support and resistance can be used for identifying the trades, for finding targets as well as stop loss. And before closing the video, don't forget to complete the checklist for optimal trading results. If you are new to this channel, please do consider subscribing this channel. Don't forget to like, comment and share if you like the video. In the previous videos, we covered technical analysis part like candlestick pattern, how to define candlestick, what are the patterns, what is multiple candlestick pattern, what is a bullish pattern, bearish pattern and all. In the upcoming video, we will see technical indicators. So once you are well versed with the price action, candlestick patterns and support and resistance, it's time to learn some of the indicators. So in the upcoming videos, we will see some of the trend type indicators like moving average, MACD, some momentum indicators such as relative strength index, that is RSI, CCI, stochastics, some of the volatility type indicators such as Bollinger Band, ATR, standard deviation, and other volume related technical indicators such as OBV, etc. If you have comments on this video, please don't forget to post the comments. That will encourage me to post new videos on different topics. Thanks for watching and have a good day.